Chapter 7, Market Structure. In this chapter, we're going to tie together and really reinforce the reaction points on the RSI, how to draw them on the candles exactly where they need to be, and how we use trend lines to show us exactly when breakouts could occur, and we will confirm those breakouts with the S2 entry signal. There's so many different types of market structure out there that people talk about. There's so many different ways to analyze all this structure. It's almost laughable. I really want you to focus on two types of structure for this course. That's it. Triangles, which includes pennants and wedges if you're into all that stuff. To me, it's all triangles. That's all it really is. They're all just different forms of triangles. And I also want you to focus on channels. Channels are parallel trend lines that create support and resistance levels within an overall trend. Triangles are created by drawing reaction points on the RSI and on the candles. But what matters most is that you identify those reaction points correctly. If you do not, you won't see the breakouts the way that I need you to see them. You will catch the S2, but it won't be the right S2 because it won't be breaking out of the market structure. You'll be early or you'll be late. Either way, you're wrong. You need to identify the proper market structure so that you can catch the proper breakouts. In the first example, we're not really analyzing these examples to see if they're proper S2 trades. I want you to analyze these examples for structure. Because to be able to identify market structure and read a market is a lot different than being able to identify an S2 entry signal. The S2 entry signals are the breakouts. Not saying that there isn't an S2 in this trade in front of you, but what I'm saying to you right now is I want you to focus on the market structure that we're drawing and how we're drawing it. So here you can see on the bottom, the RSI is moving from left to right, it's going higher, and on the top, from left to right, it's dropping. That's matched identically with the same 4 points, creating a symmetrical triangle on the charts. What this triangle tells us is that we would potentially look for an S2 on the break of this triangle. Why? Because we found solid structure, and solid structure means that you could have a solid breakout. The reason that it's qualified as a solid structure is because the reaction points match identically on the RSI and the candles, creating the same structure. When we have, if you want to even give it a good analogy, maybe like building a house, when you're building a house, you need the foundation to match what's on top of it in order for it to hold up. So here, your foundation is your RSI, because that's what you're going to draw first, and you're going to match that on your candles, and that's how you know your trade will hold up. Let's do another example. Here you can see on the bottom on the RSI, from left to right, it's going higher. Candles on the bottom, same thing. RSI on the top, it's dropping left to right. Candles, same thing. This is a triangle, this is a flag, this is a wedge, whatever you want to call it. To us, it's just another form of a triangle. Because you can see if you were to draw a third line right here, you'd have a nice three-sided triangle. That triangle formation is broken right here, and that's where we will potentially look to find S2 entries. That's as far as we're going to go in this chapter. I want you to understand this only for market structure and how we're using the reaction points to identify confluence in the structure to then trade upon it. You remember my stupid house analogy from the previous slide? Don't forget it. You want a solid foundation to build on top of. Another example here. Start on the RSI. Left to right on the bottom, it's rising. Candles, left to right, it's rising. RSI on the top, left to right, it's dropping. Candles, left to right, dropping. What does that tell us? We get a breakout on either side. That's the direction it's going. It breaks on the RSI, breaks to the short side. Candles break to the short side as well, and you get the move down. Is there an S2 in there? Not going into that right now. We're just talking about formations. Now, I want you to quiz yourself. Take a screenshot of this, and then try to draw the reaction points, pause the video, and come back and see in the next slide if you got it right. You can see here, RSI starts low, moves higher, match those points on the candles. Lower, higher, perfect. On the top, start at the RSI, left to right, you're dropping. Candles, left to right, you're dropping. Beautiful structure. Break of the structure, move long. RSI breaks it as well, moves long. Let's do another one. Here you can see a nice channel. You start with the top formation on the RSI, Left to right, it's dropping. You can see, matched perfectly on the candles. Here on the RSI on the bottom, you can see as well, matched perfectly on the candles. This channel structure is a great way to trade and know where your take profit and stop loss should be. We don't get them too often, but when you do, you're able to identify really clean stop loss and take profit levels. Here's another example of a triangle where you have the low on the RSI set, RSI moving higher to the second reaction point, candles, low set, moving higher to the second reaction point. On the top, you have the RSI moving down, left to right, candles, same thing. Nice body off the 13 EMA. You get a nice candle formation. We're going to go into that next chapter. And you get the move down. This is a nice trade. This is what you're going to start to identify as a solid S2 trade. Because I can tell you without even looking at this, I've been doing this long enough that I know there's an S2 trade. If we went down to the 5-minute or the 1-minute time frame, you would see the cross that you need to enter this trade. Before we get into the next chapter and identify candle formations like the one you see in this trade right here, this 3-candle formation, I want you to make sure that you understand how to draw reaction points, how to identify trend, how to confirm the trend with the TDI and especially the Liquid 50. And I want you to really make sure you understand how the EMAs plus the TDI plus market structure all will tell you if you should be trading that currency pair or not. It'll also tell you if you should even have it on your watch list or if you should throw it out the window. Now, in the next chapter, we're going to talk about candle formations. Candle formations are crucial to your entry signals. Once we understand candle formations, we're then going to be ready to chop into these shorter time frames and really show you guys the S2 entry at the smallest level and build backwards and give you the checklist you need to execute it properly every day. So let's get into candle formations.